managements of these companies. Today, we have with us the Managing Director of Balaji Amines, Reddy. Mr. Reddy, thank you for joining in and taking the time out to speaking to us here at NDTV Profit. Well, my first question is to do with the second quarter. We didn't have a chance to actually have a conversation around that. In the second quarter, what we have seen is a decline in volumes, a decline in revenue, but a considerable expansion in your operating margins. The first question has to do with your expectation and outlook when it comes to H2. What can you tell us about your view on what we can expect when it comes to your revenue, your volumes consequently, as well as operating margins going ahead?
See, the prices last 2-3 quarters were not stable. They were very low. Now we expect that there is some movement in the pricing and offtake of the material in the Pharma and API and agro also. We have seen some movement. So that's the reason you could see some better margins. And as regards to volumes growth, we have done year-on-year basis about 6 to 7%, if you see, and we aim it to about 10 to 12% for this total current financial year. And margins also, I think it should be between 18 to 22%, basing on the current trend. If something goes wrong, we cannot say, but as of now, yes, I can say it's everything on the track.
So 10 to 11% of volume growth that you're expecting for FY25. Mr. Reddy, just wanted to understand with this volume, what is the target when it comes to revenue top line for FY25?
See, FY25 will be about 16 to 18 crores on the standalone basis. But you are well aware that we have many things in the pipeline for the expansions. Going forward in next 2 years, we will see more than 3,000 crores if the prices are stable. Because the methylamine plant just commissioned, which is about 48,000 tons per annum plant is commissioned. And same way, dimethyl ether is another big product, which is about 100,000 tons, which is going to be commissioned by the end of the year or maybe first quarter of the next financial year. And the same, there is a product called 𝗗𝗶𝘀𝗰𝗹, there's isopropylamines. So these are all in the pipeline, the Balaji Amines. And even in the subsidiary, that is Balaji Speciality Chemicals, we could not do well because of the dumping and many other reasons. But there is a big expansions we have planned, as said earlier. There's about we have planned for 750 crores in the 2 phases. First phase will be about 300 to 400 crores, which we already started the land digging, which may take about exactly 12 months from this month. Maybe next December you will see at least 2 to 3 plants will be commissioning and starting the production in the unit 2, which are again very premium products like cyanide-based products. So looking into all these things, we aim that in the coming 2 years we should touch about 2,800 to 3,000 crores revenue, and with about 18 to 20% EBITDA margin should be in a position to maintain.
18 to 20% EBITDA margin with around 3,000 crores of revenue in next 2 years. Now, as you rightly said, so this was actually my second question, that you're doing a lot of capex when it comes to expansion. Now, what is the capex number that you have set in, and how you're gonna fund it?
See, for Balaji Amines, we will be doing about 100 to 200 crores this financial year. Maybe first or second quarter we'll be finishing all the expansions that are all meeting from the internal accruals. As far as the specialty chemicals is concerned, first phase will be doing about 350 to 400 crores, in which we may need maybe 50 crores at the end of the completing this project, that we may go for the borrowing, but the rest of the things will be from the internal accruals.
And also on your DMF, so now since the new methylamines plant is commissioned, I guess in November 10, can you expect 80 to 85% of utilization when it comes to DMF, number one? And number two, let us know the anti-dumping duty and exports for this product.
See, we were expecting now, as you rightly said, about 80% for the rest of the 6 months. We should be in a position to utilize about minimum 75 to 80%. And after finishing this, maybe under utilizing the 80% capacity, we will see once again go back to the government for the anti-dumping. Still, we are seeing a lot of pressure from the China for the dumping. That we may go back again to the government for the seeking the anti-dumping.
And also, Mr. Reddy, so one of your clients has come up with methylamine plant. Now, how this will impact Balaji as a whole?
See, anybody comes to see our plant, total plant, you are well aware that say zero debt. We don't have the debt even for the working capital also. If somebody comes, if their capital borrowings and as well as working capital, if you calculate, so those margins itself is enough for me to compete with them. So we have our own plans. We have the forward integration, many products, like as you said, that DMF, DMAC, and dimethylamine ethanol, dimethyl hydrochloride. That many products we have in the forward integration. That's the reason we don't see that any
Hey guys, meeting in 5 minutes.
of the domestic competition.
Also, you were at active discussion with the battery players, for some chemicals like 2P and NP. Now, have you received any orders? If not, when is the same expected? If you could just tell us what's actually going on ground.
Actually, we thought that these battery manufacturers will start their plants about 6 months back only, but nobody has started. And we are ready with all our capacities, with for the electrolytes, all the carbonates we have, dimethyl carbonate, propylene ethyl methyl carbonate, methyl carbonate. All these we are ready with the part of the capacities, and we are gearing up for the additional capacities also. But nobody has started. According to my calculations, only in the first quarter of the next year only, maybe actual manufacturing may take place. That time we are ready. In addition to this, we are hearing many investments in the semiconductors also. There also we have a couple of products which goes in the semiconductor. If that happens, if not immediately, maybe in coming years, that is also will be an opportunity and advantage for the Balaji Amines.
Okay, I got it. Now, can you just give us an idea about how your second half might look like when it comes to specialty chemical business? Has the Chinese dumping eased or reduced in the third quarter? What are you seeing there? Can we get back to the normal EBITDA margins that Balaji used to have, or normal revenues that Balaji used to have?
See, on standalone, definitely because of the product mix. We have already commenced this quarter itself. You have seen that EBITDA margins have been improved. Like what I used to say regularly, 18% to 20%, 20%. This time we have seen already 19%. I think we should be in a position to maintain between 18 to 22% because of the product mix. In spite of the lot of dumping happening in one or two products from the China, and we hope that if something comes from the support from the government, then that will be the plus point for the entire revenue and the bottom line also.
Okay, all right, Mr. Reddy, we leave it at that. Thank you so much for joining us and taking us through the company's outlook, as well as what we can expect going forward with respect to the various aspects that he spoke about. Of course, that's the management of Balaji Amines telling us what's in store. Now, of course, as we mentioned, a lot of the capex has happened, come through, and the management is also telling us that come next year we will have a handful of facilities which will be on stream and which will be contributing to Balaji Amines' output overall. So that's something to keep in mind. But with that, we shift focus to 𝗗𝗶𝘀𝗰𝗹𝗶𝗺𝗲 Engineering, and let's pull up